Hello, hello, hello. Welcome to Al Stock Trades. In this video, this is going to be one of the most important videos I'm going to be making regarding Clover Health. So please, if you can, share this video. Clove investors need to hear about this and see kind of what's going on with the numbers. Okay, so without further ado, we're going to get straight to work here because there's a lot we need to do. So
we like to decide things.
Sorry about that. That was a where the hell did that come from? So there, yeah, it was just another link. Sorry. Okay, this is a live, and if you have any questions, please comment down below because again, I want you guys to understand this. Okay, there's no point of me just telling you guys this and it doesn't make sense. So please stop me if it doesn't make sense. Okay, so here it is. We're gonna go ahead and open up our help menu, and we're gonna go into our stock fundamentals, and we're gonna go to the next page, and we're gonna hit the complete quarterly financials for Clover. Now, what I'm going to be doing is we're going to delete these. Okay. We're going to download quarterly financials for Clover. Okay. This is the Clove quarterly financials. Okay. We're going to open them up. Then we're also going to be downloading the annual financials for Clover. Okay. Okay. All right. So we're going to go ahead and do some analysis on Clove and do a trend line analysis to figure out, is this company moving in the right direction? And we're going to, the quarterly insights, it's going to give us some amazing data that is going to help us stand away from the rest. I'm going to show you the good, the bad, the ugly about Clover and what they need to fix. So the sad part is about the reality of things is that whenever you're trying to find good information about Clover, you go in the news articles, there really isn't any. You go on YouTube, nobody's talking about Clover anymore. Okay. And no, in terms of, everyone's quiet about it. You go on Reddit and it's turned into a trolling festival. There's like really good posts scattered in there. It's been really hard. And that is why we've created what we've created, because of this. I call it disparity within the stock market. Okay. So without further ado, I'm going to first show you the year. So if we do the year analysis here, we can look at EPS and then pull up net income. And we can pull up free cash flow. Okay. Now, 2019, the market wasn't trading, so this is gone. So we only have 2 years of data to work with. Obviously, which is why we have the quarterly data. I'm going to show you what Wall Street sees, and I'm going to show you what they're not seeing. And what they're not seeing is more in the quarter to quarter, because that is you get more data from here than you do here. You really can't make an inference off of 2 data points. But let me show you why the stock has been beaten down. So let's do free cash flow. There it is. Sorry, free cash flow. Let me copy that. Free cash flow. There it is. I was like, wait a minute. Let me go ahead and do this so you guys can see it a little better. Or is it better this way? It's bigger this way. Okay. So now we're just going to take these here, put the numbers above there. We know that 2019 is not active. Now we're just going to do a quick graph here. Okay. Revenue. Oh, hello. Revenue. What does it look like? It's going down. EPS. Oh, sorry. Revenue is not going down. I'm like, wait, that doesn't sound right. Let me go ahead and sort the data. I got to sort it to left and right because that's how we read 2020 to 2021. Sorry about that. Now let's try graphing. I'm like, wait a minute. Revenue's going down. All right, revenue's going up. That's good, right? But look at EPS. EPS is going down. Okay. Look at net income. Net income is going down. Your bottom line. And then look at your free cash flow. Free cash flow is going down. Okay. This is what Wall Street sees. Wall Street sees a company that's free cash flow is going down, its net income is going down, its EPS is going down, and its revenue is going up. So out of all my mind, all the calculations that I do, why am I talking about this company? You know, Al has gotten mad. What's wrong with Al? What is Al seeing here that Wall Street isn't? Okay. So we'll push this to the side and we'll go here. Now we're going to look at the quarterly data. And we're going to go ahead and without further ado, well, let's get started. So same thing. We're going to look at revenue. We're going to take that, put it here. We're going to look at EPS. Take that, put it here. We're going to go to the net income. Copy that. And this is all coming for a brain machine to help us out here. And then we're going to go free cash flow. Oopsies. Put that, put it here. Then we're going to take this, put that there, put this here, put this here. And then we're going to sort it this time, not like the other time. Okay. We're going to highlight, data, sort, options, left. So now we sorted the data. Now we're going to graph. Okay. Again, this is a mega analysis. We're going to do some really, I got to show you the data first before kind of show you how I got it. So you can do this yourself. EPS, insert. Here's EPS. Let's go ahead and put this to the side. Net income. Again, I can make it look good for you guys. The revenue, capitalize the R, but you guys get the point. I would rather focus our energy more on analysis. Here's the net income. Well, this kind of bugs me. This I will change. Space out. Now I said something else bothering me. Now I can space it out. All right. Now look at the free cash flow. Insert. And we're going to go ahead and do the free cash flow. Okay. Now we know this company in 2019, it wasn't trading. In fact, it wasn't trading until I would say 2020, right? So this we can delete. So this is gone. So that we removed. Okay. So now we actually have the trading data. Okay. Another thing is we're just going to spread out this so we can see its free cash flow here. Okay. All right. Now we're going to go ahead and take a look at revenue. We're going to put net income under it. Okay. We're going to put free cash flow under it. Okay. And we're going to put EPS under it. Okay. And again, this is quarter over quarter. I'm doing this because the next quarter is coming up in a few more days. So then we're going to go ahead, zoom out a little bit, and then hit this one, this one, this one, and this one, and move it. Move it here. Okay. So now that we have the data, now let's do what we do best. Let's do our analysis. So we're going to go ahead and add a trend line here. And we will add a red color. We'll add a trend line to our net income. We'll add a color, a red. We'll add a trend line here. We'll add a color. Okay. And then we're going to go ahead and add a trend line here. If you have any questions, let me know. Add a trend line here. And we're going to add a color. All right. So what do you see? Let's go down here first. Here. Or let's start with free cash flow. The red line here, what do you see? Is it going up, down, or equal? It's going down. That's what it's going down. It's literally what this is right here. We're seeing the free cash flow going down. But quarter over quarter, is it above the red line or below the red line? The answer is it is above the red line. It broke over the average trend line. That means there's something happening. There's something happening here. It's starting to do a fundamental analysis reversal. Okay. Look at EPS. It's doing the same thing. The blue line is above the red trend line. This is good. Look at net income. The blue line is above the red line. Look at revenue. Okay. So Q4 we see that Q4 is a weak one. We know that Q3 also is a weak. So we'll see the Q3 revenue to see if it's going to go down, or based off of this data, it should, it's probably going to go down again. If you look at Q2 here, there is a drop, and these are seasonality changes you can analyze. But if you compare quarter over quarter, Q2 from last Q2, you're still going to get a tremendous increase, double pretty much, right? All right. So, but you can see here though, we're looking at the trend line. But the answer is not the reason why I'm making this video is not so much about the revenue. It's more so about the burn rate, the net income. Then we could talk about the free cash flow. So now let's come in here and I wouldn't change it, but I changed it there. Now we're going to go ahead and we're going to look at the net income here. Okay. And we're going to we're going to spread these out so you could read them. Okay, you can read the Q4, Q3. So we're going to spread them out a little bit here. Okay. We're going to do some fixing. We're going to change this all to dollar bills. Okay. We'll do the same thing here. We'll change this to dollar bills. And we'll change their free cash flow to dollar bills. Okay. Now, this is what a lot of retail investors, they don't take the time to do analysis like this, which is why retail investors, they overall don't do well in the long run, right? But we are seeing something here. A lot of investors in the beginning of Clover, we'll make that statement later. They loved it near here but now when the company's stronger, they don't love it anymore, which I don't understand. But that's not the purpose of this video. The purpose of this video is to look at patterns. So Q2 of 2022, June 30th. I want us to compare it to Q2 of 2022 of the last June 30th. Okay. What do you see here? They lost $317 million in Q2 of 2020. I'm sorry, Q2 of 2021. In Q2 of 2022, 3 months ago, they lost $104 million. Okay. So what is the difference of that? What is the difference? 317 minus 104, which is 213 divided by 104. 2.04 times 100%. That's 200. They were able to reduce prices, reduce their burn rate by 200%. Do you see that? Do you see the burn rate? How it decreased? They lost $317 million during this time. That's a lot of money. But 3 months ago, they only lost 104. Their net burn is going down. So if you were to compare Q2, which is here, wait, this is free cash flow, net income. If you were to compare Q2 here, where they lost the 317 million, and compare it to Q2 here, what does that trend line look like to you now? The trend line looks positive, doesn't it? If you compare these ones. You feel me? That's a 200% increase, a 200% reduction in net burn. Okay. Now, I want you to look at Q1 of March of 2022. We're going to go ahead and put this a different color. We'll put this in pinkish. Look at Q1 from here. This shows that their burn got worse. Their burn got worse. That's not good. I wasn't excited. I was like, oh, okay, it's fine. All right, we'll figure it out. But they were able to they were able to bounce off of the revenues. It's like, okay, fine. The revenues doubled. So the revenues doubled. The revenues doubled. And then if you put 48 divided by 75 million, you could call it, and it wasn't really a 48 times, Alexa, 48 times 2.
48 times 2 is 96.
96. So they double their revenue, but they didn't technically double their net burn rate. So that's good. It means that they're becoming more efficient. Okay. But then all of a sudden, they continued doubling their revenue in comparison to Q2, but yet they reduced their net burn by 200%. So we're starting to see the companies becoming more efficient. Okay. Let's continue. Versus, like, if you look at other companies, we could do this analysis on other companies that retail investors like, meme stocks, right? And you can see that they're becoming more negative. They're becoming they're going more in the trash. Okay. All right. Now, what do we think for Q3? So let me just kind of, whoops. Let me just kind of scoot this over here. So what do we think for Q3? What do we think for Q4? What is going to be the goal here? Because we have to plan this now. We have to, sit down together. We have to talk about this now. This is a very important video. People are not doing this. I don't know why, but we're doing it. We're going to go ahead and help the Clover community out, and we're going to go ahead and shed some light on this. Okay. So Q3, which we'll choose a different color. Here's Q3 of 2021. Q3, let's do kind of a green. Green, right? And here's the green here. Okay. Okay. And then Q4, we'll go ahead and choose like an orange. Okay. And here's the orange here for Q4. Okay. So now that we got the colors in bound, we can compare Q1 to Q1, Q2 to Q2, Q3 to Q3, and Q4 to Q4. We're going to go ahead and do some really cool magic here. Okay. This in black, I'm going to put this in like let's put this in red. This in red, this is 2022. So I'm put 2022. Okay. This fiscal year is 2022. This we're going to put in like the opposite of red, which is blue. We're going to put this 2021. Okay. So you can see we're starting to organize this data. We're starting to clean it up a little bit to tell us a story. Okay. And we're going to be teaching this in the mastering course in depth using our intrinsic value calculation and all these different types of things. We're going to do an intrinsic value calculation right now, but you can see how we're making use of this data. We're turning the boring income balance sheet and statement of cash flow. We're turning it into something we could use. Okay. So I'm going to add the total net burn rate for 2021, which we already have, but we'll do it here. We'll add. They burned $587 million in 2021. Now you go back to what Wall Street sees. Wall Street only sees the annual, right? They don't really care about quarter to quarter. So there are some that do, which are a bit more confident in their price target of $7, right? But you can see here their net burn rate. Look at the net income here. So we're going to turn this into numbers, like what we did. The net burn rate is 587,756. 587,756. So we know our math is following here. So they burned in 2021, they burned 587 million. Okay. So now we're going to talk about what we expect to see for Q3 and Q4. So Q3, what I'm going to be looking at. Everyone's going to be looking at the revenue. I want to know, because the market has shifted. The market doesn't care anymore about all this other stuff it used to. Now we want to see proof of concept. We want to see profitability. We want to see free cash flow. We want to see all of that. Okay. And President and CEO Andrew Toy, soon to be CEO, said, actually, yes, we absolutely care about profitability. Look at, they just talked about that. So they understand. Okay. What I want to see is I want to see Q3 less than, you remember the less than symbol, less than 34 million, 34.5 million. What about, I want to see less than 34 million. If I see it in like the 10 million, 5 million, I'm going to be like, that's going to exceed my expectation. However, if I see it more than that, because back in 2020, they had 12 million positive. So they were positive before. I'm not asking for positivity right now. I just want to see a reduction. I want to see it lower than 34 million. Okay. Now, if it comes in at, let's say, negative 75 million, let's say they replicate it, negative 75 million, that's fine. If you look at Q4 of 2021 to Q4 of 2022, you can see that Q4 was $187 million negative. That's a huge negative number, guys, right? Q3 was negative 34. Q4 is negative 187. So it's seasonality. Maybe Q4, they're just a little bit more negative. That's just how their business works. I want to see that reduced. If I see it more, that's a big red flag. That is a red flag. Okay. But they're not going to, I have a feeling that they're not going to, they're talking about profitability, and they said that they're going to have to prove that to some extent to 2022. We're not asking for positive, we're asking, are you reducing it? Okay. So based off of this, if we do reduce this, how it got reduced from this location of Q2 to Q2 of a 200% reduction, then we should see a 200% reduction here as well. Okay. So what we can do to make things easier, we can take 200 here and take 200%. Oops, can't do that. 200%. And then we can take 200% off of this number here. Now, I'm not looking for a 200% reduction like that. But if we were to take it by half and call it a half 100% reduction, we should expect a net burn rate this year. We should expect a net burn rate of $293 million. So what we should be doing now is we should see this number copied here. Let's increase this. But we should see, whoa, hello, 293, which is, we'll just copy this here. We'll just put this here. Nope. We'll just put it here. No worries. 293. We should see that. And we'll pull this 2022. And as soon as we do that, let's strengthen this out. Then now you're starting to see what I'm seeing now. Now Wall Street's saying, whoa, hold up. Wait a minute. Let me put some. I'm just kidding. All right. So you can see that, right? That is what I'm talking about. Okay. Now, if they're able to reduce that even more, well, then the story is going to look a lot better. Okay. The story is going to be a lot better. If we can do that. Yeah, so it's around that price. We can call it that. Okay. So that's what I expect. Now, if we have to see the division per quarter now, we got to look at per Q. All we have to do now is take this number and divide by 4 quarters. So they should have on average $73 million in losses per quarter. So Q1, they made around that. They lost 75 million. Q2, they lost a little bit more. Here's the magic. Q3 and Q4 now. They need to lose around 75 million each. If they Q3, if they can do negative 34 million here, then they're allowed to lose 75 plus 104 plus 34, 213. So this will be 213, 213, 293 minus 213. They're allowed to lose 80 million. So you can see how I think this is going to be the net loss for Clover. If this gets bigger, then this decrease needs to be bigger. If this is a bigger negative, this needs to be a lesser negative. If they are just sustainable, where this is a lesser negative, this is the same, that's fine. Because this will be negative 80. And if it comes from negative 187 to negative 80, this is obviously a lesser negative number. So this is better. However, if they're coming in here at lower than 34, that'll be the ideal situation. I'm going to let you know right now, if this company reports a lower than $34 million net loss, we're talking anywhere between a $1 to $10 million net loss in Q3, this stock is going to increase. It's going to go up, okay? Because the market's anticipating it going to be more negative and all that. So you can see here now, the numbers are looking more appealing. The numbers are starting to look more sexy. We're starting to make useful meaning out of the numbers. And if we were to take a look at net income here, and if we were to stretch this out, it's at 34 here. And we said negative 80 here. If we were to stretch this out and we go here, now we're doing projections. These are projections. That's why I put just Q3, Q4. It doesn't look like the original. You can see that this is what I'm expecting. Okay? That's what I'm expecting. Earnings for Clover, I believe they're in the beginning of November. We can go here. Oh, hello. Excuse me. Didn't they? They announced it, but I guess they forgot to put it on their thing. So Clover Health Q3 earnings. So that's November 7th sounds right. There it is. Yeah, I think they just reported on Yahoo Finance. Yeah, so they reported it. They used Global News to report it. Yeah, November 7th. And if you go here, let's see if we can go quarterly results, third quarter, conference call. Here it is. Here's the original. So November 7th, let's put it on the chat group here. And I'm going to pin it. So this is where you can find it. It's November 7th. And normally don't use this calendar here. We'll put this calendar. November 7th is going to be on a Monday. And they are reporting at 5 p.m. like they always do Eastern. So I just had a problem with my time Should be 3 hours ahead, right? Wait, what? Yeah. Yeah, because it's 3, so 4, 5, 6. So good. 3 hours. Okay, good. So I'm looking at it 3 hours because I'm in Arizona, so we don't have daylight savings. I do a conversion like that. Okay, perfect. But yes, so not a lot of people are doing this analysis. Again, this is a projection. Let me put this in here. This is a projection. Okay, this is what I'm projecting for Clover's net income. Okay, but right now they're just here. Wall Street just sees this. This is what Wall Street sees. No kidding why they don't believe in the company, right? But you can start to see that they're above the blue line now. They're above the blue line. Okay. So I do see promise in this company. I definitely see promise in this company. And I hope, thank you so much, Mr. The Wheel Deals Trading Journey. Nice ring you got there. It's a privilege and honor. Make sure you share this video because I found that like I was just kind of sitting to myself, thinking, contemplating about life. And I was like, if I was, because I'm building a platform for my members, the Mastering Stock Market course, where I get institutional access to data, hedge fund information, a whole skew of things. And I was thinking to myself, and I said, you know what, man, if I was by myself without any help, where would I turn to? Okay. Yahoo Finance. I go to it's all like news. You guys are flying blind. You know what I mean? It's really hard. It's really hard uh to do this. I mean, I can imagine. I mean, like you're like thinking you're doing well and all of a sudden the stock goes down to $1.50 or whatever, and you're like, what's going on? But then you look at the numbers and the numbers are telling you a different story. The numbers are saying the numbers are great. We can look into a company that's like 50 cents, $1 or whatever, and we can see, like I can show you a company that's like proof of concept is becoming crappier. You know what I mean? And we can do that. We can look up we could do bad companies and analyze them so we can see the difference. Yeah, no, you're very welcome. I was trying to explain in the our bi-monthly meeting here. I was trying to explain like what I was trying to, but this is a nice take a screenshot of this. You like how I color coded it? Wait, you can't see here. Oopsies. Here. You like how I color coded it to make it easy? Here's 2021, here's 2022. It's very nice and organized. And let me zoom in here. Yeah, this needs to be stretched out a little bit so you can see the number. You can see like the numbers are starting to make sense. The numbers are making sense. Q2, they went from negative 300 million to negative 100 million. I mean, that's a really big drop, right? Hello, Russia is watching you. Hell yeah. Welcome, Russia. I'm so sorry about what happened with, Mr. Putin there, but, hopefully we can have you come back to, the trading. You can still trade stocks, right? Because we do have Russian, we do have some Russian clients. And I think to myself, I'm like, how are they trading? Maybe they're trading through VPNs. I don't know. But I do what I want to do right now is I want us to go into, here's the mastering course. We have like a lot on here continuously adding. I want to go to the intrinsic value calculation. And we're going to go ahead and do a value calculation on Clover. So we'll go ahead and call it for the 1470, 1.4 billion. We're thinking they're going to make 3 billion this year. If we take a 5% revenue multiple, we're looking at, and again, it doesn't matter where you put the numbers, just take the average here, 73.5, 150, go for 10 years. We're going to assume they're going to go 35%. We're decreasing their revenue growth rate because we're assuming that they're not going to be able to beat their $800 million quarter over quarter in 2023. It's going to be hard to double 800 million. If they can, well, I'm wrong. That means the stock price will be higher, which is a good, if I'm wrong, that's good, right? So it's always good to be conservative. All right, 480.85. And then here's the stock price. But right now, even if you look at the recession level is $7.33. You would have to go to 52% to bring it down to $1.46. The reason why I knew it was 52%. I'm not a math genius or something. It's just because I put that number in like 30 minutes ago with our group. So 52%. So what does that tell you? That tells you that I expect a 52% return year over year in my Clover investment. Now you may be asking yourself, well, okay, well, 52% is amazing. I would love to do 50. I would love 52%. But then you have to understand it's 52% from $1.46. So if you do $1.46 times 50, that's 73 cents. So if you add 73 cents, there's your 50-cent return in 1 year, $2.19. So you might be like, what? 219 is terrible, right? It's like, what? 219? It's okay because growth stocks are really weird. Value stocks, they go up in a very mathematical order. Growth stocks, they fall unmathematically and they rise unmathematically. That they're like a roller coaster, which is why people like them. You lose a lot, but you gain a lot. And the easiest way to win from those is just treat it like a value stock by just looking at the fundamentals. Yes. So earnings watch party. That is so this is the problem with like clinicals. I don't, whoa, that is look at that. Ooh, sorry. Sorry about that. Haven't done that one in a while. So clinicals. Yes. So clinicals, the problem with, this transition I'm in with medical is that it is, I don't know my schedule. I'm gonna learn my schedule on Monday. So I will tell you if I want to do a watch party. Like I want to do it. In fact, I'm thinking of taking a day off. I'm gonna say I'm day off. I'm gonna do I can do that, right? But I'm not gonna. It's not like a day off. It's like 3. So maybe I can get off of work early, at the hospital. So I'll definitely try to. I'll let you know in advance, for sure. Now, DPW. I love your picture of Chamath. Do you guys look at his picture? Let me see if I can make it bigger here. Take a screenshot of it here. You can see it a little bigger here. Or is it? You can see that there. That's a nice catch, guys. That's a nice catch. Oh man, you guys crack me up, I swear. That's a good one. I lost my train of thought there. Okay. So VERB would love for you to look at. So yeah, I'll definitely take a look at it. For stock requests, if you I got it from one of your videos. Yeah, no, VERB. Is that one of the semiconductor? Because there's a lot. I look at so many stocks. It's gotten to a point where it's I've analyzed so many. Have I talked about this stock? It doesn't seem like I have. Doesn't look familiar. Yeah, send me which video I got it on. You got it on, but this does not look familiar. I think you're mistaking me with a different channel. unless it's part of our oh, the picture not verb, the picture not verb. Oh, okay. I'm so sorry. You see, this is why I love the Zoom call, so we can have a conversation. It's hard to understand the reading with the text. Yeah, so sorry. You got it from my videos. Oh, that's fun. That's nice. Oh man. Yeah, so VE, wait, let me just make sure I got the thing right here. VERB. VERB. So what we do here at All Stock Trades, we have these bi-monthly meetings. And what we do is people vote. Your picture popped up again. People vote. People vote for which stocks they want to look at. And then we go into it and do an intrinsic value calculation on the bi-monthly meetings, and we do an analysis on it. So if you're part of our group, there is a voting section or like a request. Say, hey, can we talk about this? But just as a quick glance, I do like the revenues are growing. Gross margins look very sexy. Net income, though, it is becoming more negative. The negativity is becoming negative. And here's the thing. This is me looking at the annual. So I'm doing what Wall Street's doing to kind of sort through these, right? Shares were diluting. In fact, we diluted 10x from its original startup. Free cash flow went from -4 to -30 million, and working capital, sadly, is going down. See, with Clover, working capital is actually going up, right? So definitely this is a risky play. And the beautiful part about this is if you go to our brain machine, and if we go to the help section, and if we go to stock fundamental analysis, and we go to financial scores, you can look at the risk factor associated with this company. And the ticker symbol, what is it? Is VERB. And you put it in, and you get a P score of 4. Okay. So you get assets of here, working capital is in the negative. So you get a Porosky score. So what is that? So that's something we talked about earlier here. So it's good to share with you guys. Porosky score range. So if you look at the Porosky score, this company is near it's near here. But you just can't use just one metric to help you. You have to also use the Altman score. The Altman score is -5. So what the hell is an Altman score? So Altman score is this. So we're at a negative, what number? -5. So this Altman score is used to help identify if a company is headed into bankruptcy. And as you can see, this company has an Altman score of -5. It's below the charts. You see how you see it's bad? Yeah. Well, oh, good. So good. So why didn't you come to our bi-monthly meetings? We just had it today. I mean, we didn't, it was like kind of off meeting here, but we hanged out. Next time, come on over. I'm gonna make better announcements now. I'm gonna make a better schedule. It's my fault. Next week we're gonna meet again, so I'd love to have you on. Yeah. So reason I brought up the stock is more about the company itself. Yeah. So, but you can see how it's distressed. It's a negative. It's danger. It's in its danger category. So I have to look into more. So it's just good because it helps you like, oh shoot, there's a red flag somewhere. I gotta go see what's going on. Oh yeah, I guarantee you were using text to speech when you said our stock trades. Because whenever I say our stock trades on text to speech, it always says our. I don't know why. You're busy. Oh no worries. We'll have some time next week. But check this out. I'll give you an example. If we do the and you could just click on them. If you click on them, and if you type, let's say Apple, Apple, we all know Apple, right? It has an Altman score of 7, and then has a P score, Palsky score of 7. So, Altman score is a very strong 7. It's like off the charts. It's very safe. It's a safe stock, right? So you can see how, there's a lot of hidden features in Brain Machine that I haven't advertised yet because, it's hard to advertise it's hard to advertise something that you're building. So I'm still building it, and it is taking a lot out of my brain power. But I can't wait to see the fruits of my labor with your guys' success. It's gonna be amazing. Um, Typically, this information is geared more for hedge funds. They use this. It's a the elites. They tend to have this type of information. The Powski score is a measurement system that looks at the company holistically to see if its current ratio is good. In fact, let me just show you here what it looks at. So um, if you go here and look, let's open up Wikipedia. It looks up. We'll do this later, not right now. Can't see. There it is. If you look at the calculation procedures, it looks at the return on assets, operating cash flow, return on assets from a change. If there's a change, it looks up the leverage, liquidity, and source of funds. It even tracks the source, the changes in leverage long term, the current ratio, the number change in shares. Get it? The change in shares if they're diluting, the gross margins, the asset turnover. It was created by a Stanford accounting professor named after him. Very famous metric. Very smart individual. And he does value investing research. So this is a value investing metric. It helps with understanding and calculating intrinsic value. It helps determine the best value of stocks. And what we do is we do the calculation automatically for you, so you don't have to check all these things. It just does it for you automatically. All you got to do is just type in the ticker symbol, and it does the calculation for you. Okay. And here's one of our members doing it right now, Rabdo. So you can see, so it's the Altman score is not a -5, it's -0, and it's been improving. So my goal is to take screenshots and show you the improvements of the Altman score and the Porowski score quarter over quarter. How cool would that be, right? So you can see holistically how a company is doing over time. You can look at the revenue, the liabilities, the total assets, divide that and that, which gives you the current ratio, all these different types of metrics. So, and it's my fault I haven't been showing you guys this on YouTube. There's a lot that we do here in the mastering course and how stock trades. There's a lot that we have. It's just it's hard because I'm also trying to become a doctor, and it's very difficult. But I'm a turtle, and or slowly but surely we will move, and we will eventually create one of the best platforms for retail investors. Because the goal is to take you from 0 to 1. It's to transform you to something better, and that's the goal. That's always been the goal. Haha, there it is. I was about just to ask if I can see the past numbers in order to track the progress. Absolutely. We're working on that. That's the next step. So there's just right, because that's gold, right? Because then you'll be able to see the numbers. For now I will teach you how to do it without that too. So you can look at the measurements of what we use, return on assets, return on this, return on that, and you can calculate that, and it'll all be in the beta test. So the beta tester will have all of the current ratios over time, so you'll be able to track them. Sorry, my eyes are getting wide like a crazy man, but this is really like what we're doing here is we're giving retail investors a fair shake on Wall Street and giving you guys data that only a few have access to. So it just makes me, I'm just really excited. This is, I'm very excited. It may be very hard to be excited during this market, but for sure, in the next coming years, we will definitely be very happy with our investments. Oh, did you kidnap that coder? Yeah. So I had a talk. I said, "Oh, it'll be ready by the end of this week." I said, "Hold on, wait a minute. Let's both set a deadline until November 1st. So I know you're busy. Let's go." So November 1st, I'm going to put my foot down on November 1st. That's going to be so we can get to that. I can get on to my next level for you guys. I mean, you guys see me. I'm in the hospital, and then on Saturday, Sunday, what the hell did I do? I'm on the computer coding. We're gonna go ahead and I'm gonna start coding a office space for us in the metaverse. I kid you not. We're gonna have an office space in the metaverse, so you guys can come together and talk and do some stocks and stuff. Again, I want this to be fun. I don't want I want you guys to for all of our members. I want this to be something exciting that we can all have fun with and really enjoy and really make money, right? To help us with our financial freedoms, right? So it'll be fun. I'm very excited to share with you guys this information. Overall, God bless you guys. I hope you enjoy this beautiful Sunday. I love each and every one of you. I may do a live just check in with you, just holler at you and say how much I love you guys. We put God first in everything we do, and yeah, I'm very grateful. I got a message here. Let's see. Is imposter syndrome common in grad school? Yeah. Oh yeah. Yeah. Oh yeah. Yeah. I'm a physics master student, and I'm going to apply to astronomy. Peach, I don't have a yeah. So I'm going to be quite honest with you guys. So I don't quite frankly have imposter syndrome in Arizona because it's like my home. But when I went to Mayo Clinic, top 1 hospital, in the beginning, I was very shy. I was like, this is the top 1 hospital in the world. I'm a loser. I'm X, Y, and Z. Imposter syndrome is real. I used to kind of used to tell myself this. What am I? I came from the bottom. What, these are the real doctors. What I kind of have, what am I? I just had this negative thought in my mind. Like these doc, these, I don't, you know what I mean? You just have these thoughts like, whoa, like who am I? Right. Yeah, it's all bullshit. Yeah. So I over time I started to pay attention, and I'm like, wait a minute, I know this. I know that. The whole world can lose trust in you. But the most important thing is that you never lose trust in yourself. So yeah, it's real, but the cure for imposter syndrome is work. If you do 5,000 questions, you won't have imposter syndrome. You'll be teaching the whole class, right? So, yeah, I mean, well, here comes my dogs. Be careful. They're going to start barking. In terms of top graduate school, you can apply to like 20% top, 50% mediocre, and the other 20% to, do a standard deviation bell curve, and the other 20% to low tier grad schools. But if you're in the United States, they're all great schools. You know what I mean? Right? But overall, guys, I don't want to make this video too long. There was some really good information here. Can you give a 60-second recap? 60-second recap. This is going to be hard because these are one of these videos that you need to watch. You need to watch this one incomplete. But I can give a complete recap just kind of quickly here. And if you want to learn more, I highly recommend you watch this video because you need to watch this video. Okay, this is the most important video I've made on Clover. All right, so if you look at the annual rate of revenue is going up, EPS is going down, free cash flow is going down, and net income is going down. They're all going down except for revenue. The problem is when you have net income go down and free cash flow net go down, and obviously EPS is attached to net income. This is a trash company, but you can't just use the year because you only have 2 data points. You can't summarize this. So you need to use quarter over quarter. And you can see that the trend lines are still going down, but the blue line, which is the actual quarterly result, is above the red line. And we're starting to see a reversal in the companies, okay? Likewise, if you look at, for example, Q2 of 2021 versus Q2 of 2022, we went from negative 317 million to 104 million, which is a reduction in 200%. So the goal right now that we need to see for November 7th, Monday at 5 p.m. Eastern Standard Time from their reporting, we need to see that Q3 is decreased from 34 million to whatever. Most importantly, Q4, we need to see less than 187 million. My goal for this year, I want to see Clover at less than $293 million in net loss. If they do that, if they do 293 million, then you can take this number here and put 293. And by doing that, you can see that if they do that, we're starting to trickle back up on the net income side. And then the free cash flow side is going to start going up. And the EPS is going to start going up. And then 2023 is going to go higher. And they're going to hit next to profitability. So you can see the reversion towards profitability. Or not reversion, going back up. So I hope that makes sense. I explained it really quickly, but I recommend watching the whole video because we break it down. All right, guys. God bless each and every one of you. I'll see you on the next one. Oh, and last but not least, we are having a Black Friday sale for the Mastering Stock Market course. Comment down below if you just want me to release the coupon code now, or because actually, no, it's August 23rd. So we can do an early Black Friday sale because I'm really busy in the hospital. I don't want to forget because I'm going to be working through Thanksgiving most likely. It is what it is. But I was thinking doing the Black Friday sale early for you guys. It's going to be a nice one. So we can do that or wait till Black Friday for the mastering course. And this will be the lowest that you'll ever see the mastering course. Yeah. So that's kind of the idea there. Let me know. Comment down below. I'll see you in the next one.